We join this program already in progress.
Well, what happens to that money? The money that you get goes, it's an asset, it goes in your bank account. Okay, so now you see how this goes from the profit and loss statement over to the balance sheet, that $1,000. Now, let's say that in order to make this sale, you had to buy a widget to provide to your customer. And so that widget cost you $100. And so you paid out $100 to your widget supplier for that widget. That $100 is an expense, and it shows up here in the expense column on the profit and loss. Where did it show up over here? Well, if you paid for it in cash, then the $100 comes out of your cash assets. If you paid for it on a loan or a credit card, then at least for a time, that expense will show up here under liabilities. But let's say you're working on a cash basis. So the $100 comes out over here, and so that $1,000 now becomes $900. You see, income over here, expense over here, but the totals are different because over here we're showing the income and the expenses separately, but over here we're keeping track of the assets so that you know how much you have as an asset. I don't want to beat this up too much. I'm just trying to show you how what you're seeing on the profit and loss statement tells you only certain limited items. It tells you what you brought in, it tells you what your expenses were, but it doesn't tell you how much you had left. The way to find out how much you had left is over here on the balance sheet. Even though on the profit and loss, we have a thing here that shows a total where we take the income and we deduct the expenses, and that leaves us with profit. In this particular case, our profit would be $900. True? That's right. That would be $900. But that's all this tells us. It doesn't tell us what we have left, and more importantly, it doesn't tell us how much the business is worth. That's something else that you can only tell from the balance sheet. All you can tell from here is that you had $900 left over after your income and your expense was taken out. But you know as well as I do that in actual fact, you have a lot more expenses than one, at least in most cases. And so there's a lot more detail here. Let's look at another issue. Let's say on that same $1,000, let's say that you had an expense for $1,000 that was from whatever, a widget assembly machine. So your expense is $1,000. Well, you don't have an asset over here that can use up that expense. So where does that $1,000 go? Well, you owe that money, so it becomes a liability. You see, this goes here. This comes out over here. This is an expense, and it goes here. Now, this has now become, instead of $900 in profit, you have $1,000 minus $1,100, you have a loss of $100. So on the profit and loss statement, you see a loss. Over on the balance sheet, you still have $900 in assets. You have $1,000 in liabilities. Assets minus liabilities equals equity. That $100 shows up over here as equity. That means your company is worth less than it has brought in. However, because this is on the balance sheet, it doesn't appear on the profit and loss. If we're talking about taxes, the amount of money that gets taxed is the bottom line number here. So for tax purposes, profit and loss tells you a lot of the things that you want to do to be able to calculate the tax that you owe. But the actual value of your company is determined by the balance sheet. But focus on the fact that the expense is real and the expense comes out over here. But let's look at this. Let's say we make a payment on the accounts payable. This is accounts payable, by the way. So let's say we pay $100 on our accounts payable. Where does that show up? Well, once again, the $100, we have $100 up here. So this becomes $800. And this becomes $900. Nothing at all shows up over here on the profit and loss statement because we've already got the expense over here on the profit and loss statement. This entire transaction shows up only on the balance sheet. That means it does not impact our income. It doesn't impact our loss. The expense is over here on the profit and loss. So if we're just looking at profit and loss, we're not getting a complete picture. This does not tell us, this tells us we have $100 negative, but it doesn't tell us how much we have left in the bank. It doesn't tell us how much we owe, and so forth. So this is an important thing to keep in mind when you're looking at your profit and loss statement. The other thing you want to remember about your profit and loss statement is that one single picture of your profit and loss is not all that useful. It's like reaching in your pocket and seeing how much cash you have and then believing that that's what your business is like. And that's not true. The profit and loss statement can reveal to you trends about the ongoing nature of your business. It can reveal to you trends about income. It can reveal to you trends about expenses. For example, even with what we have right here, if we go to next month's profit and loss, even if we bring in another $1,000, we do not have a $1,000 expense. So the next month will show the same income level, 1,000, but the expenses now will be, instead of 1,100 like they were this first month, they'll only be $100 the next month. And so we see a trend of expenses. This expense, which is out of pocket, which is calculated right then, but it shows up over on the balance sheet. This is why you can't just rely on a profit and loss to tell whether your business is doing well or not. I have told this story many times, and I'll tell it to you again right now. I was talking to a client, and he told me, he said, Mike, he said, we just went over my bank accounts, and you tell me, or my accounts, and you tell me I made a profit. I said, yes, that's true. And then he says, well, then how can it be that my bank account is overdrawn? Well, this is where that explanation is. That explanation is here, obviously not on this set of facts, but on another set of facts, he could have profit in his business, but because of what he had to spend for other things, items just like this payment on the $1,000 debt, he could have to pay out that money and be overdrawn on his bank account. So you cannot rely solely on the profit and loss to tell you how well your business is doing. It's an entire package. Neither can you rely upon the results right this minute because it's an entire package. This is one of the problems with our tax system. When we do taxes, we do them once a year. And it is possible to manipulate the way the money flows through your business to make sure that you are showing a lower profit at tax time than cash flow would allow you to utilize. We frequently tell people to build up expenses in the last quarter or the last month of the year so that when we come to year end, we have a lot of expenses to report against the taxes for that year that has ended. So in this scenario here, we're able to report a $100 loss to the tax man. For if this was December of 2023, we'd report a $100 loss for the year, and we wouldn't pay any taxes. But we may have had money flowing through the business the entire year. So if you want to see what your business has done, you have to compare the profit and loss statements over several months. Whereas when we do taxes, we take a snapshot, and that snapshot only applies to one day, and we can do all kinds of perfectly legal things to change the timing of what we do to be sure that we're paying the minimum taxes when they are due. That's one of the things that a good accountant or a good tax guy will do for you in putting together the things that need to be done in order to minimize your tax bill. So the profit and loss is not the only thing you can look at. There are some other gotchas built into that. And one of the quickest ones to talk about is if you borrow money and you have to present your income to the lending authority, say for a mortgage or for a business loan. And if your tax guy is any good and he's been keeping your profits low in order to minimize the taxes, the underwriter at the loan company may say, well, you don't have enough income to support this activity. And so you have to turn around and be able to show them through a series of financial statements and so forth that, yes, we may have manipulated this for this year, but here's what the actual flow of cash is through my business. And that's something you need to be aware of. So before we close, I want to remind you that next Tuesday, I'm doing a program where we're going to look at the financials for the year to date. We're going to start planning the fourth quarter of 2023. It's a review. We're going to talk about this kind of thing in more detail. And if you'd like to join in, then I give you this site. It's mcw.bz/Forley-Rev. MCW, well, www if you want, mcw.bz/Forley-Rev, R-E-V. And if you go to that website, you'll see a way to sign up for this program. I encourage you to do so because it will help you know how to handle these kinds of reviews so that some of the things I've talked about today will make more sense to you when you've had some actual hands-on practice. So until tomorrow, have a good day.